Actually, for a kind of ho-hum Friday, there's a decent amount of stuff to talk about. Bounce is really, really middling here. Stalled right at resistance. Bulls definitely have their work cut out for them, that's for sure. Anyway, I guess we'll get started. If you come in late, you could always watch the rebroadcast, either here on X or I post it to Twitter and my Vimeo page. So, we've had a lot of economic data this week and a lot of earnings as well. And I think the most important part of the economic data today was obviously the jobs report, which was, I'm trying to think of the words to describe it, but maybe a dumpster fire would be a good one. But we'll get to that in a sec. Let's start off, let's take it from the top. We had the GDP report this week, which was a miss. So disappointing growth there. It was supposed to be 3%, it was only 2.8. We had PCE, which is, of course, the inflation gauge of choice from the Fed. It was a little bit of a mixed bag. It was a little better than what the consensus estimate was on some of the lines, a little worse on others, but up from the last report. So inflation is reaccelerating. Now, add on today's employment report. You know, I hate to be an I told you so, but look, the jobs report numbers have been awful. They, once in a while, have these big numbers, and then they just seem to get revised down and down and down in the subsequent reports. The last report was 254,000 jobs, and it turned out to only be 223,000. They were expecting 125,000 this go-round. It was only 12. So if it was only 12, will the revisions take it negative? Could we be entering recession? That would be interesting. This is seasonally supposed to be a good time of year. I know the hurricanes and all that, but I think that that's actually factored in to some degree. So I'm not willing to just write it off to that. I think also people are a little bit hesitant right now with the election coming up, obviously, and the Fed next week. Just looking at the Real Clear betting odds, it's 60.8 for Trump, 38 for Harris. That's actually off a little bit. It had been, I think, 63 at one point. And you're also starting to see a bit of a rise in interest rates again, ever really since the last Fed decision where they cut rates. So it seems to me that rate cut expectations are coming in quite a bit, and you're actually starting to see the long end of the curve steepen again with rates going higher. And we're looking at TLT right now, the bounce is really nothing. I don't know that the downside is that huge. I mean, the last real lows that we saw were 88.68 and 87.34. So I'm thinking those would hold if we were to come down into them. But I don't know for sure that that is definitely going to hold. But for me, I think it's playable. We had talked about doing some type of a put spread, bull put spread, bullish call spread play for a move back higher if we do get that plunge. I'm just looking at the at futures here, and I'm looking where they stalled it basically right at the 5,800 level. This was the low from, let's see, 1, 2, 3, 4, 5, 6, 7, 8 sessions ago. And we're basically right back down here. We had spent some time above, we came down, and now we're hanging out around the 9/18 Fed day high, which to me is very key here at 57, 55, 75. So what now? We had moved value higher the prior two sessions with overlapping to higher VWAPs, and then yesterday, of course, it came down. So we're trading pretty close to that VWAP, 57.70 half. I think for the bulls, they need to at least hold that, and they really need to get back up over and stay up over the 5,800 level. The Qs are similar. It's a little bit of a better situation there, but the bulls do need to stay and get back up over this 20,263.75, and we're going to be tough graders and say 20,381.75. That was the key support zone for a while, and now it seems to be acting as resistance. So until we can get into there, I'm a little leery with regard to upside in stocks. The VIX is really, I don't want to say it's getting going because it's not, but we are in the higher end of the range here at the 2308 to 2376. I think that zone is very key here. Obviously, if it starts clearing on the upside, there is some room, for maybe significantly higher volatility into the 29s, 30s, and beyond. I don't really see what the catalyst for that would be at this point, but it could always happen. Maybe disappointing Fed, maybe a disappointing election outcome. That, I think, could contribute. Moving back to the major market indices via ETF, today was a bit of a dubstep situation with roughly equal highs to yesterday, just a little bit below. Obviously, we haven't taken out yesterday's low, which was the 50 MA, and we had talked about covering some shorts into it. I was expecting a bounce today. I actually mentioned that I thought there could be a dubstep situation in last night's super follower video. By the way, if you're interested in those, just go to my profile and click on the subscribe. It's only $9.99 a month, and I post those videos regularly. I think if the bulls can get over today's high, that's probably where the bears now have their stops at 575.55. So anything over there, I think, could fill in the gap here to 580.01. But I had posed in the video yesterday, was yesterday a professional gap down? Yeah, there wasn't really follow-on today, but could that just have been options pinning? My thinking here is that until the bulls can get now up over the Friday and Thursday highs, we have to assume it's sideways to lower. And if we were to take out the low from yesterday, the Thursday low, and we got below 568.44, I think it's obviously a no-brainer down to 565.16, which is, of course, the key reference breakout zone level that we were referencing from 716. And if that were to fail, are we going to do the whole MA to MA, fib to fib thing? So the next MA on the downside would be the 100 MA at 557.77 and rising. And we know between those 553s and 554s, there's also reference support, but that's a long ways off. I'm into doing some kind of a put spread here or put spread overwrite, given that VIX is up enough that I think you can get some juice on that. I think the prudent move would be maybe buying 560. Let's see if I will work that up here. I'm going to pull up the option series. Pull up SPY. The one I filled yesterday, just an FYI, I did two versions of this. I did the December 555, 535, 520, and then I also did, I'm going to probably add on to some of these, I also did 565, 545, 530. So one was a little bit higher with the upper strikes and one was a little bit lower with the strikes, just because I wanted to play it a little bit. I wanted to put on a little more size, but I wanted to do it with a bit of a lower delta in case IV really starts pumping. I didn't want my lower strikes to come into as much pressure, and I think the difference between 530 and 520 is significant because you're basically taking it then well below the 200 MA at that point at currently 534.52 and rising. So here's one of the little tricks I like to do. I generally like to buy 50 MA, sell 100 MA, overwrite with 200 MA. That's just an old sort of back of the envelope trick. If it lines up with some key reference levels, I like that still better. So let's say we did go to December options and we pulled up this trade here. Let's say we did it at the 565. We took it at the flood there. We did again the 545. I want to just see if that trade would work out again well for me here. And then the 530. You could put that on for a 12-cent debit. Yesterday, I think I got it on for actually a small credit. So today it's a little bit worse. But I like doing those type of trades. You get the $20 wide on the downside here. And if it doesn't work for you, you know, getting it on, if let's say we filled it for this small debit or we filled it for the credit, you could always roll up the puts if it starts kiting up. Doesn't necessarily mean you have to because you got it on super cheap and you could just leave the original play to stand. But I generally like to try to make some money on these trades, so I will roll up if the price starts going against me and what was a small debit or a small credit becomes a bigger credit or no debit. So I like that setup quite a bit. In the Qs, let's do something with Qs. I don't know if I have to check if I filled anything in the Q play. I don't think so. I'm running like a little mini hedge fund here. I have too many positions on. I got to trim them back. All right, so we're below both the 10 and 20 MA. For me, it's critical in all the indices, but for me, more critical in the Qs. So very simple. Bulls have to get over 492.31. If they lose the two-day low here at 483.75. I don't know that the 50 MA will hold it because it's right here. I think we'd probably come into the 473.93 to 473.82 level. And I mean, I don't want to assume end ranges. I mean, we could find some support in the 477.40, but that area to me was the key breakout zone, so I think we could retest there. Let's see, if we wanted to put on a trade, let's pull up the chain. We'll keep it consistent. We'll go out to December. So let's say we did the, I guess I'm just looking at the open interests here also. 480, 460, 450. 450 is very close to the pennant fill here, so I am comfortable with that range. I don't love that it's December for this. If we were to go back, although I think we would need December to get there. There's not going to be, this isn't going to make sense for November. Let's take a quick look. Just covering bases, I'm going to the 15 Novembers. Yeah, this is going to be too big. So it's got to be December. So smaller size because it's a little longer dated. This is, of course, 20 December that I'm looking at, the actual monthly expiration. I mean, you don't have to do that exact. I mean, you could do the weeklies. I tend to try to gravitate more toward the monthly, but I like that. 480, 460, 450. I mean, we could also do 485. Let's see, 465 if you want to take it a little bit closer to the money. And I guess we'd have to roll up that overwrite to 455s, and you could get that on for a 6-cent credit. If you don't mind a little bit of an outlay, you could still do the 450s. It's only a 73-cent outlay, but I'd be all right with the 455. I think that's close enough to that pennant fill that it would work. So I'm good with that. On the upside, if you wanted to, I know some people wanted to sell some call spreads. I had gotten some messaging about that. If we were to do, I'd want to sell 500, of course, because that's the big key level. And maybe, just going to see if we bought 505. There's not enough juice there. It's only $1.60, but I mean, if you are willing to take on that risk, I think the risk here, at least right now, given that we're already through the big tech earnings, for the market just taking off here and ripping to all-time highs and then just continuing still higher, is probably a bit lower now, right? We have Apple under our belt, we have Google under our belt, we have Meta under the belt, we have Tesla under the belt, we have Microsoft under the belt, Amazon under the belt, but Amazon is also up against highs. I had told you close to the 200-ish would probably be a sale again. And sure enough, it was. I like that the responsiveness of the market is a little bit predictable here. It's making some trades easier to accomplish. But I think we have to always be on guard for that potential year-end rally or post-election rally where we did build up some pressure here near the highs. The pullback was rather minor. I'm just looking, for example, like JP Morgan, there is really no pullback. It's not able to clear the 225.48 with any conviction, but are we building enough inventory up here that we will ultimately pop on through to the 232s and maybe even a run to the channel high, probably closer to 240? Or are we building inventory up here with traders getting longer and longer with poor trade location, and ultimately they'll see what we just saw in the tape with a liquidation break and still lower? For me, I have not ruled out that yesterday's gap down was an aberration or if it was a professional gap. Sometimes it takes a little time. Like on 724, if you go back on the chart on SPY, there was that big gap down, a very similar candle to today, although that candle did take out the prior day's low. Multiple days of consolidation. We got the gap fill first and then the rug pull. So I always take these sort of big body candles or reordering type of moves as not necessarily for sure the start of something new, but a warning sign that we could be at the start of something new. On, for example, 10-1, we had a similar candle, a couple of bearish sort of dub steps lower in the lower end of the range, and then basically took off after a couple of more days of consolidation for some more highs. I don't know, though, that we're going to see that this time. We may. So that's why I'm playing it a little bit cautious, and I'm not fully committing here to being short. But let's just put the alert. I'm going to set the alert here over 575.55, so 56. And I'm just going to say long. I should actually say cover shorts and press longs, because I'm not fully short or fully long here. I kind of have a little bit of a hedge situation. I just told you about the SPY. I'll probably put on the Qs as well. I'm looking at this BABA situation. I'm curious to see how that would react on a Trump win, but 90 bucks with some resistance for a while. I'm thinking that could be some support again. Somewhere between 90 and the volume distribution starts. If you look at volume profile here, there is a big node 85 half-ish, so that $5 plus zone I think could be targeted if you want to do a 1/2 put ratio on the downside. Then my big concern, though, and I do caution this, is after seeing what happened with RSX, with the Ukraine invasion, I have some agita about what could possibly happen if there was a Taiwan invasion. I mean, this thing will be, all the China stocks will be down gigantically, and then, you know, probably the next day or two they'll be halted. But if you want to hedge that risk out, I'm just looking here, 95.90. It's still a debit, and that's by 1/2. And what I was going to suggest to cap off that downside tail risk of a Taiwan invasion, it's insane that we have to even talk about this, but maybe buy something further out of the money just to cap off that, you know, black swan type of an event. I'd love to fill this for a credit, but we're only getting a debit with a $5. I mean, $5 wide isn't really, for me, that doesn't make sense. So that's an example of one I wouldn't put on here. If I was able to get, we ended on BABA the last time. I didn't like the idea that there was no juice on a $5 wide put ratio, and buying the tail risk protection for potential Taiwan invasion made the trade not so appealing to me. But with Boeing, I think it's got to clear the 50 MA. I think it could be a 2025 story. I just worry that there's a lot of losses here, and there could be end-of-year tax loss selling, particularly where we are in the year. I mean, we're very close to the end of the year, so there could be some of that acceleration. If you want to maybe start nibbling here, maybe just take it with a real tight stop below the 151.23 low. That would make some sense to me. All right, let's do a couple of requests, and then we could wrap it up. So I had someone ask about SAP. So that was a gap down into the channel. It held the, it's caught between the 10 and 20 MA. I would use the 10 MA as a stop if you're short, 235.98, or high of day, dealer's choice there, 235.56. And I'd press the short if we broke 231.82, probably for a move down to the 50 MA at 225.51. I don't know if you're going to get the full articulation down for the full gap fill, but if you want to play, let's say 230, 215, let me see if there's any juice in that, because that would be the gap fill plus the downtrend plus the 100 MA. So if you did, let's say we did SAP 230, just looking at the puts here. I don't know why this is not, here we go, 230. There is no 215, so you'd have to do 220. Is it worth it for 290? There's no overwrite potential here. I mean, I guess you could write the 210s, but for a buck and change, doesn't really do it for me. I would, yeah, I mean, if you want to wait for the 20 MA to break, that makes some sense to me. I wish there was is there 215s in the January series? No, that's really, really annoying that they don't have that. Sometimes you just can't do it, right? So for 290, I don't know if I'd really want to do it. If you're comfortable and you're really confident it's going to go lower, how I would do this, let's see, if we structured it with short calls, I mean, you'd be right up against it here. You'd have to sell the 240, buy the 250, and then you could get the trade on for a 27-cent credit. So would I want to do that trade? I mean, maybe. Let me just see if we were to do 250, 260. So we're not like as pressed up on it here. That maybe. That's $1.25 debit. I'd feel either one. Either one is fine. If you want to short the 240 or the 250 calls, buy the 250s or the 260s, and then buy the 230, 220, and then put a stop on the whole shebang over the 10 MA, I'm good with that. Moving right along. PayPal. Someone was asking about PayPal. I had been short then long. I have to check and see if I'm actually in any put ratios at the moment. I don't think so. I think I have some on an AFRM still. I played a few of these. I do a lot of these put ratios, and when it comes down, I cover the short, and then I leave the overwrite on ideally for a bounce. Once in a while, you get caught out there in something like that, like I did in Intel, and I've been sitting in a little bit of a loss in that for a few weeks or months at this point. But it's not big. It was a small position, and I'm not really sweating it. Yeah, I'm in AFRM 35.30, and it's a small winner here, actually. I'm up about 41.5 cents, 42 cents on the trade. Let me see with AFRM, actually. Do I want to adjust this at all? This would need seasonally, AFRM is pretty strong, right? Let's say I did 40, 35? Maybe. All right, let's go back to PayPal. But yeah, with the firm, I'd prefer the $10 wide. Let me just see that. I want to just do for a firm first because it's actually one I have. I'm in January, by the way, for that. It's a little longer than I'd like, but so the reason I'm remembering why I filled it this way was because I couldn't get it to fill for a credit at the time, and I think I wanted the potential for earnings to dump it. Although that's coming up pretty soon here. And then I wanted time for it to potentially recover if the move was down. So that's why I did the January. PayPal. All right, let's go to PayPal. Pull up that chart, roll that beautiful bean footage. Let me see, I had another request to HIMS. We'll get to that in a minute. Let's do PayPal first. Right on the 50 MA. For the bulls, they need to hold it right here. If not, I don't know that you're going to get the gap fill, but it's possible you get it to 73s. I don't know that I'd be buying the dip here just because we got the 61.8. So we did. So this is so far trading very technically. We got the 61.8 at 82.87. We're at the 50% fib at 76.64, and it bounced. So if you're long, that's your stop. If you get below the low from, what is this, Tuesday, 76.81, and the 50 MA, it's probably a short for that gap fill to 73s and maybe even in 69.70s. But if you got back up over, I don't even know that you have to wait for the 20 MA. This should not get over 79.71 at this point. I mean, we're splitting hairs here because it's 80.42 at the 20 MA. But that to me would be the trigger for the move up, probably for if they're bowling for 90s. But if you want to try it here and you want to use the low of day as a stop at 76.46, I'm fine with that. Just pay attention because if it's a gapper, you're going to have to react. So let's say it does gap below your stop. What I'll often do is use the opening 5 or 15-minute low as a stop. So let's say it does gap down and it doesn't take out those opening 5 and 15-minute lows, I may stick with the long. I've had situations before, it's very rare, but this has happened, where it does the gap down, it holds, and then it does another gap down and it holds, and another. It's rare, but those sometimes do happen, and I think the rule for me would be is if you get more than 2 of those, you just have to stop it out. All right, HIMS, not one I cover very often. So it filled the gap, the 10-11 gap. I never understand why people want to mess around with these like unknown stocks. It held trend, and it looks to me like if you're already long, I'd be booking the 20 MA at 20.89 plus, and probably fully out at the 10 MA at 21.49. On the downside, don't let it get below 19.09 on you at this point. That to me would be a bit of a deal breaker below the 100 MA, because that's been key support. I mean, it was support on 5.3. You saw mini support there on 8.2, but once it was taken out, it made new lows. And then that's really where the gap took off from. So the 100 MA there is the must hold in my opinion. Anything else we want to cover? If you want anything else covered, just type it in chat. I think we'll wrap after this. And then I'll combine both videos and post it. I'll tell you, if this keeps freezing, what I may start doing is just do the live on YouTube and send the link. I mean, it's obviously easier if it's just right here on X, but it's not easier if it keeps freezing. That's for sure. Let's take a quick look. Let's wrap on gold and Bitcoin because I get tons of questions on those. So gold, like I said, stalled at the trend. It's pulling back. I would actually, if you haven't booked some gold, I would with the GLD. But ideally, if you get a bounce to 250, 352, the 10 MA, anything below there, and we are. We didn't take out yesterday's low, but there is risk down to 248.36 to 249.45. And it would, believe it or not, still be bullish because that's channel low. And this would be the pattern. We've seen channel high, we've seen the pullback to channel low, new high, channel low, a new high, and then channel low. So it still looks like it's doing okay, but that doesn't mean you have to sit through the whole decline. Bitcoin. Getting the pullback. Look, we had talked about this as a profit taking at 74,415. It's now pulling back. We're right on this 10 MA here. Oddly enough, this is the 11.10.21 old high from back in 2021. So it needs to hold around here. That's 69,355 to 69,455. And we're just teetering there. If that were to fail, the 20 MA is 67,023, but where I'd be looking to reload would be channel low, which would line up with the top side of the old downtrend and the new uptrend at 63,950. It'll probably be the 50 MA by the time it gets there too. So could we have a $10,000, $11,000 pullback in Bitcoin? It's possible. I mean, we've seen larger ones than that. Futures just look like they're kind of stuck here. Would I put on any new longs or shorts here? I think if we were to get over and stay over 57.85, I might play it for the move up to 58. I would think if we got over 57.85, there's probably a quick trade up to 5800. And if 5800 clears, you could see a big squeeze up to the 200 MA 30-minute, which is 58.30 and falling. But it doesn't really feel like we're in that kind of a tape, right? Apple isn't really participating. They probably have Amazon pinned to 200. And I mean, for me, actually, if we slip below 57.55, 75, that would interest me. But you have mixed breath here, 1.12 to 1 negative on the NYSE, 1.31 to 1 positive on the NASDAQ. AD line is a freaking joke down here. It's not even over, I think it's like around 100. It's not even. It opened today at 1,600, which is pretty high, but it just fizzled out very quickly. I've been noting on today was a little, yesterday was a little bit better, but ticks have been really middling, almost. You had a little buying in the morning, distribution mostly in the afternoon, here a little bit more buying. That's typical, by the way, to see the afternoon sag, the lunchtime sag. Yeah, this just looks very, very typical to me of tick action on a kind of middling day. If you have really strong breath, like 5 to 1 or 9 to 1, you'll probably have that mid-afternoon sag be very unremarkable, I guess the term would be, and you could even see some buying. But let's talk Google quickly. I liked the price action today, oddly enough, because where were we looking for it to pull back to just fill the gap, right? And we filled the gap and bounced. So I think if you want to be long against 168.64 or even low of day here at 168.88, it's all right. The upside, probably we would be targeting back close to 178s. I was thinking about, I have an order out. It didn't fill yet. I'll tell you what it is because we like to. So I went to here's my one piece of concern. If it goes too quickly, the delta for this trade will make the calls not really that profitable, because in January I was doing let me just tell you the trade first, and then we'll break down why I like it and why I don't like it. So I didn't even fill it yet. So I was going to do the 175, 185 call spread. I'm cool with doing 175, 190. That's fine too. And I was going to sell the 165, 155 put spread to fund it. So a couple of reasons that I don't love it is that the 165 isn't really that far down, although it is into some support zone. So I don't mind that part. The part that I do worry about, though, is the call spread, because the 175s have a 49 delta and the 185s have a 30 delta. That's why I was saying maybe the 190s would make a little more sense here, because that has only a 22 delta. So that could work. I didn't want to pay more for the trade, though. So if that were to fill now, that would cost $2.27. But if I did the 185, it could be $1.13, which is much cheaper. And to recoup that $1.13 with rolls up on puts is very easy. 2 and change isn't so much, but I mean, I would have more cream on the upside if we did get an end of year rally. That's my big concern. Now, if we did it in December, there was a reason I didn't like that. Let me just see why. So that would only be $1.05 to fill. So for $1.05 versus $1.13, do you really want to do 50 days versus 77? I mean, maybe if you think it can get there and you'd get that contraction. Here you'd have the 175s with a 46 delta, the 185s with a 24 delta, so there's a little bit more there, and then the 190s I like with the 16 delta. So this actually isn't such a bad trade. You just need it to work soon. So I would be cool in December, the 175, 190, and then let me see, the 165, 155 put spread. If I were to do 160, I just want to see how much I'd. Yeah, it's a 273 outlay. You know, I have to tell you, I'm almost more on board for that and paying a little bit more, because yeah, I mean, for $10 you're taking in $2.17, but yeah, this doesn't make sense. I mean, for $5, I guess you're taking in $1.32, and my concern here would be, I guess, the downside, right? Because it didn't hold the earnings gains, so maybe a smaller. Does this make sense though? If I did the 175, 190, so it's $15 wide on the calls, but only $5. Yeah, it's really got to be $10 wide. I mean, if we're gonna do 160, 150. That's not too bad. Let me see where the 160 is support-wise. It's a little, yeah, that makes a little bit more. So if you want to play it a little more comfortably, you could do the 160, 150, buy the 175, 190. If you want to pay a little less, maybe just do 175, 185. So you're 10 up wide on the call spread and 5 wide on the put spread, or 10 wide on the call spread and 10 wide on the put spread. Also, if Google doesn't work for you, you could always roll down those upside calls. Just because you put a trade on, by the way, doesn't mean you have to sit in it for the entire time. I'm of the opinion that you do not let option trades go to zero, ever, if you can avoid it. I mean, sometimes you get caught, right? And the idea is that your backstop is zero, unless, of course, you're just short naked puts, and you can really blow yourself up that way, or short naked calls, and it just takes off. You can blow yourself up that way, too. This is why I like to do spreads. It just, it brings me down to the sleeping point at night. I guess in my 20s and 30s, I was okay with being a little bit more stressed about stuff. Now I kind of like to be a little more chill. So yeah, I don't mind starting that out with the 175, 190, 160, or 150, or 165, 155. That's dealer's choice there about how much risk you want to put on. I'm sort of the opinion maybe the 165, 155, because that's $1.86, and if it starts going against you, you could roll down the 190s to 185s, or even, I mean, you could fill this, believe it or not, I don't like this trade, but you could fill it for almost a 30-cent credit if you're willing to just do $5 wide. But for me to go out to December to do $5 wide for a move just back up to 180, does it make sense? You could do that in a couple of days. So to me, no, that doesn't make that much sense. I'd rather get there by, it failing on the initial attempt and then roll it down. That's a big trick I do, and it's one I do a lot, actually. The idea being that if you get your move initially right going your way, you're good, right? You don't have to make any adjustments. If anything, you roll up the puts, right? But if the calls if the stock stagnates or goes against you, you could take, your big slug from the beginning and then roll it down and have a little bit less ambition there and recoup. Obviously, you're banking the premium of decay from the higher strike, and then you're taking in more premium to reduce the cost of the trade from selling a still lower strike call. So, yeah, any of those. We've dissected this one a bunch of ways. And let's take a quick look at Meta, too. If you lose the 2-day low in Meta, could revisit the after hours lows, but it's right at the 50 MA. Would that hold after consolidating here, maybe even for a couple of days? Meta's still really high. It's, believe it or not, still closer to the higher end of the channel than even the midpoint of the channel, which for me would be 542-ish. So I would probably wait either for a larger pullback or for this to, because I still think 600. I still think 600 is going to be resistance. And we had talked about selling 600 ahead of the earnings, particularly after Google was up, because usually Google goes one way, Meta goes with it initially, and then they part company, and Meta would go the other way, or vice versa. If Meta reported first and it went up, Google would go with it, and then Google usually goes the other way. It doesn't always play out that way, but just usually. I'd actually probably should do some kind of scientific back testing on that, but it's just one that I've done, for a while, and it's worked. And when it works, we've had some instances, right, where Meta really goes like a lot lower. So, yeah. I think I'm going to do that one of the Google trades. I'm going to have to figure out which one I want to fill, but I like that one. Are we still streaming here? Any questions, by the way, about the option trade I talked about, or any option plays people are in that they want to consult on? We don't usually do that, but I'd be very into doing it. I think I've forgotten more about options than a lot of people on TV ever knew. And it's funny because when I graduated college and I had, a finance major, I didn't really know that much about options. I took tests and did well on them, but I didn't really know options. You kind of learn options by trading options. I know that sounds kind of a little counterintuitive. No, really? All right, I guess we'll wrap it there if no one has any questions. You could type it out in the chat below. I saw a few people had made requests. That's how we did the stocks. But I was curious if anyone had any questions about the option trade we talked about in Google, or any other play that they're looking at or interested in. I guess not. You can type to me. Just, I think the line says, say something. I hope this is working. I hope I enabled it. I remember the last couple of times when this didn't work, it either froze or I hadn't enabled it. But, all right, we'll wrap there. I think we covered quite a bit today. Oh, Workday. I think we talked about this in one of the most recent videos, too. I'm not a huge Workday fan, generally. It's a bit of a splashy chart here in the last couple of days. Let's just take a quick look. It looked to me like it's all right as long as the 100 MA holds. 234.66. 200 MA could be some resistance on the upside. That was the key MA resistance on 919. and it would also be the underside of the old uptrend line from the pennant that was from 10.8 connected to the 10.16 low. So that area between the 50 MA at 246.93 and 250.56, I'd probably be trimming into. They were up on their last earnings, and they basically took back the entire earnings move. So, yeah, I mean, I think it makes sense. This area looks like it could be a buy, at least if you're exercising the stop below the 100 MA at 234.66. That to me is all right. Yeah, I mean, I'm just reading the comment again. It looks to me like it did find some support, and I mean, if anything, it could be a little bit of a look below and fail of the 10-2 low with today's candle, and I like that hard reversal. Let's see how it closes. I mean, there's not that much more runway between now and the close, but if you're in it, I mean, how are you in it with shares or you're in it with options? Because if you're, let's just say you're long naked calls, you could always sell some upside calls as a hedge. Or just, I guess, just stop out below 234.66. I said this the other day. People were asking me about options, how to stop out of them. There are two methods that I like. One is just a percentage of, if you're down X percentage, you just take it off. Some people use 15%. I tend to just use the share price as my stop for everything. It's just super simple because if the stock is below a certain price, that's where I'd stop out on shares. Or if it triggered above a certain level, that's where I'd get into it based on shares. So I kind of view the options the same way. I mean, maybe it's not the cup of tea for everybody, but that's how I do it. Based on share price, not the percentage. But I do respect people who use the percentage method. I know some traders who are, some serious traders who do that. And they think I'm crazy. They think I'm crazy with my method. But it's all right, So you're not in it yet, but you're looking. This is the workday trade. So you're not in it, but you're looking once above the 1030 high. I don't know that you need to use the 1030 high as much as maybe the averages here. I guess you could use, or the MAs. You could use the 10 or 20. I mean, the 10 and 20 MA are pretty stacked at 239.18 and 240.44. I'll tell you, I don't even. I mean, I don't know that I love. Let me see what the intraday is like. We're all day traders, right? When you're entering a position, if you got a pullback in this to, let's say, 236 to 237.40ish, you might want to put it on there. Maybe some type of a spread, and if you want to have a stop that's tight, 235.85. That was the most recent swing low from the 1305 candle. Kind of looks like it's taking off here, and I do like that it's back up close to the pre-market highs. Was there any news this morning on workday? Do you know? Because it looks like that. I mean, it looks like it just had a big underwater close, and then today is the opposite. I mean, I'll tell you something. If you pull up the 2-day 5-minute chart. If you have that in front of you, you almost have an inverted head and shoulders here. Actually. You do have you do have an inverted head and shoulders here. We're a little overbought on the money flow wise, but if we wanted to use a neckline, this is dealer's choice at 237.88, or if you want to use 237.44. I actually, for a short-term trade, I don't mind this here with that inverted head and shoulders situation. And then, like I said, if it were to take out the 235s, 236s, I mean, that would really negate it because you'd be taking out the right shoulder. No news. Yeah, I guess it was just up with the economic data initially. But yeah, this to me like I said, if you pull up the 5 or even 15-minute chart, however you like to use it, that to me, yeah, I see the inverted head and shoulders here. And it looks tradable to me, at least. I mean, I don't know that you need to buy it up here at the high of day, but if there's let's say a little profit taking toward the close, and you want to put that trade on, that makes some sense to me. Tape is just not so hot today. I don't really love putting on trades that need continuation with weak breath. It's sort of like sailing. You want to have the wind really in your sails, and here it's sort of, you know, you're trying to catch some gusts here and maybe even, you know, pulling in on motor. Is there anything else that's catching my eye here? Should we just keep going till it freezes? Or we'll cut it short soon. Let's see. Netflix was pretty good on the numbers, right? They had good earnings. And they're holding up pretty well. If you're long Netflix, I think you could use 744.26 as a stop. But I'm thinking Netflix, on a benign tape, they make the run to 800. I mean, I wouldn't really get short Netflix unless it lost I keep saying 2. I don't know why I'm saying 2. 736. If it lost that, I would, after this consolidation up here, that would take you below the earnings candle low. I think you'd probably, I don't know if you get the full gap fill, but I think you'd get down to 700. Let me see in the weeklies. Just curious if we were going to play for 800 in the next week's series. Let me clear the decks here. It's going to be annoying because I have to rework up that Google. Let's say we did 765. Yeah, the 800s don't have a lot of juice. You'd have to do 790, 800, and with 7 DTE. If it was like 2 or 3 DTE, I'd be into that. Maybe Wednesday I'd fill it if we were kind of approaching. But with 7 days, if you get a gap and it goes too quickly, that could be a little bit problematic. Although I don't mind doing it smaller size here. 1x2. Let's see. I don't know if I want to do 1x2 really, but yeah, it's still a small debit. What if we did? What if we sold the 785 and bought 2 times the 800? That you could fill for an 85-cent credit. Let me see what that would look like here. Yeah, the break even would be 785, and that's within the expected move. I mean, it's kind of close to the expected move, right, of $24. And then if it were to overshoot, it would be 814. So I don't mind this one, actually. I don't mind that one at all. And what's the delta? And they're low deltas, though. That's the problem. 785 would take you up over the high. Let's say if we did 7. Yeah, all right. I don't mind that one. If you want to sell the 785 one time and then buy the 800 twice, smaller size, that makes, and what if we were to buy it 3 times? That actually is only a 7-cent debit. That brings your break even down to, let's say, 807. So if it got up there fast, there'd be some juice that you could pull off of this, particularly if it made the room move to 800 by, let's say, Tuesday or Wednesday. I don't know that we're going to, but I mean, we have the election and we have the Fed, so it's possible you get that kind of bang bang. And you've got decent theta decay there. Yeah, I don't mind that. 785, 800, 1x3. Owning the 3 on the upside of the 800. And to really, trigger this, you'd have to get up above the earnings highs. So, yeah, I don't mind that. All right, well, let's end it there. I think we covered a lot of bases here. And I got my weekend video going this week. I'll tell you what, I'm going to set up for you wonderful ladies and gentlemen because I know a lot of you are new to my stream. That's why I'm starting to do these lives again, because a lot of you don't know my work. We used to do these all the time. So I'm going to set up a special promo code after this. It's going to be just live. And that's going to be for my Vimeo page, the premium service, and you'll get a free month of service to try it out. And you'll get to see both my midweek and weekend videos. I've had a few people ask me about this recently, and I forgot to do it in the last video, but I didn't forget now. So it's a little bit of a Friday special. So if you want to go on my page, if you've never tried the service before, or if you're interested in coming back with a free month, I'll make it open to everybody. Usually the promo code is just for new subscribers, and people who've used it already can't, but I'll open this one up to everybody. So the promo code will be live. And if you go, let me see, if you go, there's a link in my bio that takes you in. That's also just the regular promo, but I'm going to set up a special one for this with live as the promo code, just LIVE, and you get a free month. So if you're interested in that, message me. Also, we're getting a lot of requests about the coaching sessions that I've been offering for $100 an hour. I actually have a couple to do later, but I think that those will be very beneficial if you want to level up your game, or if you just need help figuring positions out. I have had a few people consult me on their portfolios. They just like send me what they're in, and they're curious what I think about it, and if I have any suggestions, I can go over that with people too. How many of these should I make available? I guess I'll put in 100, but yeah, so this will be for the subscription, single code. So if we need more than 100, I'll add them in. I don't know that we will, but we might. That sometimes happens. So I'll add that in. It's live right now. So if you want to sign up for a free month, feel free to do so. I will post the link on my Twitter feed, or X feed now, in like a couple of minutes after we end the broadcast. Have a great weekend, and I will see you for the weekend video.